Okay, so for our next two questions, we get this quite a bit, and they're great questions. I had them too when I was new in the industry. Our first question, how long does it take to receive funds? Meaning when I request a policy loan, how long does it take until I actually get my money? I want to know. And then second, when it comes to multiple loans, is there a limit? And then specifically, you're going to see we're going to highlight a question here, how do multiple loans work? And we'll explain exactly what that means. Let's begin with how long it takes, because this is a nice quick answer. So a couple ways I can receive funds when I actually take a policy loan. The first most commonly used method is direct deposit, an ACH transfer. When that happens, typically it falls between 1 and 5 business days. Typically the average is 1 to 3 business days if the loan form and everything is in good order. But to set expectations properly, call it 1 to 5 business days. If you want to be very conservative, call it 3 to 5 business days. If I decide to go by check, because I can still have funds, I can request a loan and have it sent via check. I can either have it sent regular mail, which we know how that works, snail mail, especially when we're waiting on money. That typically takes 5 to 10 business days, or I can have it sent via overnight. If that happens, it's overnight, so it's 1 business day. A couple things I'll add here is overnight usually is a charge. If anyone is working with our office, if you're working with our office and you've done this before, you know this, we always cover the charge for that overnight shipping. If things need to be rushed, we're gonna make sure that we do everything we can. You decided to work with us, so we're gonna cover that. And then second, with the direct deposits. So another thing with our office, for everyone that we work with, we always encourage everyone to reach out directly to our office whenever you are requesting a loan. The main reason why is we'll make sure that the forms are in perfect order. We'll complete them for you based on how much you want to loan, what bank account you want it sent to. Our office will send you the loan forms in which you'll sign off, can send it back, and then we send it directly to the insurance company, our direct contacts at that insurance company. And when we do that, everything goes smooth. What I will add is a lot of companies have online portals which are extremely convenient. I can go right online, request a policy loan. It's nice in that feature. What's not nice is sometimes I'll request it online and it bounces, or there's an error, something gets messed up. My point being is we've seen frustration occur through those apps or reaching out to the company direct. So what we did in our office, this is me talking a little bit about our company, is created a pure client relations division. Really their strength and why we initially launched it, they do much more than just policy loans, but a big focus is to make sure that policy loans go as smoothly as possible. So if you've worked with our office and you're used to the drill, you know how it works. If you have questions, feel free to reach out anytime. But that is my long-winded answer to how policy loans work. Next piece, multiple loans. So is there a limit per year? Meaning, if I've got any amount of money in cash value, is there a limit to how many times I can actually transact or request a policy loan? And I have up there, depends on the company. Most companies don't have a limit. I can request as many loans as frequently as I want. Maybe there's 2 weeks in between each request or something like that. But for the most part, there's not a limit. However, some companies do have a limit. And that goes back to our last video where we touched on the point of the contract language. Is some companies, you'll read in their contract language or on a memo that states a maximum of 4 liens per year. And what that means is one can take a maximum of 4 policy loans per year. That's something I might want to be aware of. Maybe I say, hey, I'm not going to take up to 4 loans per year, so this company that the agent's recommending works perfectly fine. But again, a tidbit of knowledge to say, hey, this is good to be aware of up front. This way I don't find out after the fact and say, Steve, why didn't you tell me that? And now I'm in a bad mood and I don't like you very much. We want to try and prevent that at all costs. Now, when it comes to multiple loans, here was a specific question. Does each loan count as an individual loan, or does it function more similar to a line of credit? So Individual loan, meaning each time I take a loan, is that a separate loan that begins to generate interest on its own? So if I take 10 loans out over the course of a year or a couple years, will I have on my policy 10 separate loans, or will it just be one balance, like a line of credit? So the answer is, it's like a line of credit. To demonstrate how it would work, it's like this. Let's say I've got $100,000 in cash value, and I have a policy anniversary date of January. Let's call it January 1 to make things extremely simple. Excuse me. And I'm going to transact 3 policy loans here. The first one in January will be for $20,000. So I've got $100K in cash. I borrowed out $20,000, no problem. When I take that $20,000 out, loan interest is going to begin to accrue in January. April, I take out another $50,000. So what has happened at this point is between January and April, loan interest has accrued on the $20,000. Let's pretend for simplicity that my loan balance has grown to $21,000. Now, April, I pull out another 50, my loan balance would be what? 71. Any loan interest is going to be added to that balance, but it's my collective loan interest, my collective loan balance. Let's say I take out another loan for $10,000 in October. So I've pulled out a total of $80,000. When it comes to the interest, the item to be aware of, and like we touched on here, as interest begins to accrue, we're going to touch on this more in another video, when I take that loan out at annual simple interest daily actually. So it's going to compound, or it's going to accrue at annual simple interest, but by the time I hit April, it won't be this high, but let's just pretend it's 21K plus the 50. So I'm now at 71K. That's now going to begin to accrue interest. Let's just say that grows to 73K. I'm not doing any math, I'm making up numbers. Plus 10, so my true balance may be 83K, if that makes sense. Point being, I do need to account for the interest. The purpose of this was really just to show, hey, if I take loans out, it functions more comparable to that of a line of credit, not individual loans. It's going to be one large loan balance if I'm taking multiple policy loans from my policy. Multiple loans from my policy. Hope this one helped. We'll see you on the next video. Hey guys, Steve Parisi here. If you enjoyed the content you just saw, please subscribe, like, and hit the notification bell for future videos. If you'd like more information or to see some custom policies for yourself, feel free to call or email our offices at the contact information below.